Good morning and welcome to the ADS Securities Markets Update. Today we will discuss definitely the FOMC Meeting Minutes, which was a massive surprise for the market with a dovish tone, which basically showed that September's rate hike is almost, or maybe we can say that September's rate hike is already off the table. First of all, and basically to start with the statement, the first statement was leaked around 30 minutes before the scheduled or the official announcement, but at the same time the leaked headline was hawkish, saying that most of the Federal Reserve officials saw conditions for rate hike or for a rate hike is basically approaching, and therefore the market got excited and bought the US dollar at the beginning, or once this headline is leaked, and this is basically where the US dollar started to rise, despite the fact that this is only one leaked headline. The US dollar again soared quickly across the board after this leaks, however, soared quickly to almost session highs. However, a few minutes after, when the official statement was released, even before the scheduled time, basically comes in with a shockingly dovish note or dovish tone, which basically led to another collapse in the US dollar. The statement showed no tip towards September's liftoff, and basically with a short sentence saying that they can't rule it out. Most of the members generally agreed that more info is still needed for the time being, and that the condition is only approaching, but they've not met yet. And the interesting thing here in this statement is basically that the Federal Reserve is concerned over China, but this meeting minutes is before the Chinese recent action to devalue the Chinese yuan. Therefore, the next meeting should be more interesting. Finally, and most importantly, the Federal Reserve noted that there are no enough evidence for inflation to rise again toward, or to move higher toward the 2% target as of yet. In short, the first headline, or the first leak headline, was basically hawkish, and then the rest of the statement was surprisingly dovish. However, we at ADS Securities here in Abu Dhabi, we noted that the Fed is likely to change the tone in this meeting in our yesterday's report, and we were waiting for the Federal Reserve to keep on buying more time since the beginning of the year until this day, and likely to buy more time maybe until the end of the year. After the announcement of the Federal Reserve, basically the Fed Fund future is pricing the first rate hike in December instead of September, with only 38% chance to hike in September and 66% chance in December. And even the 66% right now in December, it was about 78% yesterday before the FOMC statement as well. In the meantime, the US dollar index on the daily chart basically showed another negative signal, showing another bearish engulfing candle on the daily chart, but the index remains above the 50 and the 100-day moving average, which we believe at some point that the US dollar will crack it and will not hold for a long time. In addition to that, and looking at quickly at the FX market yesterday, as you can see, the US dollar went down like across the board, or tumbled across the board, including the euro, which basically trading above 111. The British pound regained above 156.80s. We touched also 157. The yen also tumbled below 124. We had also many currencies basically advanced across the board, or against the US dollar. In addition to that, gold soaring also yesterday. In addition to silver, mostly across the day, gold is above right now, is above 1140. Silver also soared by more than 2.5% above the 15 level, reaching as high 1540 so far. However, oil prices unfortunately continue to decline sharply before the Federal Reserve statement, reaching new session lows before also stabilizing after the FOMC statement. But however, West Texas is still trading around the $40, and Brent crude fell toward $46. As for today, there are many economic figures will be released throughout the day, beginning with the UK, which basically the UK retail sales expect to rise by 0.4%, in addition to Canada wholesales, jobless claims in the US, existing home sales, and the Philadelphia Fed Manufacturing Index, which will be very significant, especially if this number came in with a negative reading, just like what happened in the Empire State Manufacturing Index in the past few days. And if so, this will likely put the US dollar under pressure again throughout the day, and maybe also throughout the week. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic reports and analysis. Thank you for watching. I'll see you once again tomorrow.